Hello, good morning. There is currently a trade setting up, and I thought I would go through with you how I prepare for my trades. To start off, we are going to look at the current market state, and then we're going to look at the tools I use to actually prepare for the trade up and coming. I did do this about 10 minutes ago, but the recording went all funny, so we are a bit behind. But let's just go straight into it. So I'm looking for a liquidity sweep. Right now, the bias is that price is moving upwards. If we look at the daily, price has been moving upwards for a while after we had this big slump caused by Trump. But big move up. We have an upwards bias. Price might be slowing down now, but the general bias is upwards. We've marked out the areas of liquidity. This being the daily, there are 4 hours and there are 1 hour areas of liquidity as well. This is a 4 hour, but it is also a 1 hour. But right now, price has moved up with momentum and straight into this range. We have a top level here and a bottom level here, and price has just reached the bottom level. When I first recorded this, price was about here, moving down. So price hadn't yet reached this area, but I was interested, and that's when I decided to grab the camera and record, but it went all funny, so there we go. Approaching this area on the hourly, we can see that we have approached it with some momentum. We have a big shift down, which continued and continued again, and now we are in this area. Just because we have momentum doesn't mean price is going to continue down, because we are in this range-bound price action. If we want to see momentum continue down and take a short, we would need to see it push past this level and continue down towards these areas of liquidity. But right now, because we are in a ranging market, momentum doesn't mean much until we are outside of a ranging market. So approaching this area with momentum, what happens next? To take a trade, I am looking for a long, because we are at the bottom of this range. I want to see a move upwards, and the bias is upwards, so I want to be trading with the general direction rather than against it. You can trade against it, like you could take a trade from here all the way down, but right now obviously we're not in that area, and I'm just generally looking for price to reject from that area because we are in a upward bias. So the hourly, we are in this area. 15-minute is where I will take my entry and look at how current price reacts. Here we can see price moving down, retrace, moving down, retrace, moving down. We do see a shift here, and this is important for two reasons. One, because we do have a small area of liquidity here. I'm not too hung up on that. I'm not going to use that as confirmation, because liquidity on the 15-minute isn't as strong as the 1 hour or the 4 hour or the daily, for example. But it's something to bear in mind. But this shift does mean that price is pushing down. So I need to see a strong rejection in this area and a confirmation that price wants to move up. So right now we have these two wicks, which is nice because it's showing that price is slowing down. But as you can see, price is struggling to reject from this area. So if price hovers, i.e. if we have more wicks and it just slows down, it doesn't continue pushing through, that's good. If we get a shift up, that's a sign of rejection. However, that shift means that there is further liquidity in this area, and price can come back down, tag the area, and then move up. So if we see a shift, that will be nice, but I won't take it straight away because price is likely to come down and retag before going. Why do I think that will happen? Because it usually does on this pair. From the back testing I have done through what I have seen, and we can look at some easy examples over here. See, momentum up, shift down, price came back up, shift down, shift meaning area of liquidity because it pushes price down, has come back up to test these areas before moving down. Same here, right? Wick up, nice sign of weakness, shift down, doesn't continue, moves up, wicks into this area of liquidity before moving down, right? Similar here, moving up, we have a move up here, not a strong liquidity, slightly strong here, but it's created this small area of liquidity here from these pushes up. Prices come back down, tagged it before pushing up again. So it means that I can't just jump straight into trades here. Just because we reject and then shift up doesn't mean I should take it, because I know from previous history that price is likely to come down and retest again. So what I'm doing now is I'm just waiting. So I know what I want to look for. I know that there's a potential trade setting up. But that doesn't mean I just sit and I place the trade and I wait for it to hit in a moment that looks nice or something that looks nice and then execute it. What I need to do is review this chart, compare it to my plan, and then move forward accordingly. So how do I do that? I use Notion, and if you don't know what Notion is, where are you? Have you been living under a rock? Because this stuff is brilliant. I love Notion. It's basically just a productivity tool, but I use it for all my general personal productivity, my Forex, my fitness. I use it for everything because I love it. But here is my calendar where I look at where my sessions of backtesting, forecasting, and trades are all going. And here I have my templates, trade routines, general plan for the trading day, forecast, backtesting, ASR templates, and general personal bits and bobs as well. And then down below, I have certain aspects as my naked charting pair characteristics, ranges and their characteristics, channels and their characteristics, momentum and what that looks like, and then different trading strategies and the plan within them. So we are looking at a liquidity sweep. So in here, I have my backtesting results as well as my winning trade gallery and all my work for that, which is all buried in within that and such. So I take my plan, I would copy that and I will paste it into my trade journal template, which I have copied here. So what I do for that, copy these dots, click duplicate, and then drag it into here. And I have already done that. So here's the setup. So I have my plan here and I have what the chart currently looks like. And I can compare going through my plan, seeing what it says and seeing if what is happening in the market matches with my plan. So I know whether I'm trading with or against my plan, because then it's very easy. If something doesn't match up, I don't place the trade. So I've gone through this and to me, it makes sense. I've planned out all the liquidity. I've seen how price reacts, and I'm currently waiting for confirmation of rejection and price wanting to move to the other side, which we don't quite have yet. It's starting to shape up as price is slowing down. But at the moment, because of the shift down, as we saw on the hourly, I don't want to jump into anything just yet. I need to see price really slow in this area and then reject, but it's starting to do. So it's starting to shape up, but we're not quite there yet. Yes, see if price moves with momentum, which it has done, we need confirmation. If the candle is a shift in momentum, wait for a retest. So that's going through again what I just said about how price will sometimes create these areas of liquidity by shifting down, come back and retesting them, and then moving on from there. So that's something to be mindful of, and that's what I'm currently looking out for because of the momentum that's currently to the downside. Retest still needs to display weakness so it doesn't run through. So we don't want all this majority, and that's why I didn't place a trade up here, because it was very volatile. We had shifts in both directions and I just didn't want to get involved in it. We saw this wick, didn't know how price was going to react to it. It could have just filled this wick and then continued upwards. So I wasn't happy with how this price action looked here, although it did move down. It's not something that looked nice for me and I didn't want to trade it. Which direction is the price bias? It's upwards. Use the daily and the 4 hour to confirm this. It's upwards. If trading against the bias, go short term. So here, if I was trading to the downside, we have these 3 areas of liquidity, this red one being a big daily one. But we have these 3 areas of liquidity. I could target these lower areas. However, because the general bias is upward, I would not want to target these areas because price is more likely to move up than it is down. I would only take a short trade here. Price might move down and it could come to these areas down here, but because of the bias right now, I wouldn't be too confident in risking that, right? So I'm just happy for a short trade. For a long trade, depending on this area here is kind of a no man's land, because this price is higher than it has been for a long time. Like it hasn't, since November, it hasn't been to this area. So just trading up there because there's an area of liquidity is a bit iffy. I am very happy just to take a short-term trade here back to this upside and see what price does, because it is currently ranging. Price has been on this upward movement because price is re-establishing itself and re-stabilizing after the volatility of all the news events. So I'm not looking to force it to go higher. Because it's starting to slow down now and go into more of a range bound action. So I am happy just to take a short trade here, a short-term trade, I should say, sorry, but a buy overall. So looking just to hit this low of this liquidity here, not the top, not the middle, just the low. Hit it and go. That's all we need to do, a nice short-term potential reach. On the 15 minutes where I would do my entry, and I am looking for a minimum of a 1 to 2 risk to reward ratio. If it's a 1 to 1 or anything less than a 2%, gain, I am not interested because it's just not worth the risk and capital. Even if it does go, and I'm sure it will go, even if it's anything less than 2, it's just not good practice to do it, because long term those kind of trades are not sustainable. You do not want to take anything less than a 1 to 2. My first phase of my funded account that I had last year, I think I only won like 33% of my trades, but because my risk reward was like 1 to 3, it like the losses that I had were like 150 on average, but the wins were 1,500, something like that. It's sustainable that way. So even if you don't have a great win rate, and I don't because my trading isn't the best right now, you can still do really well just because the trades you're taking offer a good risk reward return. You're not trying to do one-to-ones. So that's it for now at the moment. I have it all set up. I have my planning and my things here. I'm going to fill out my confirmations and my emotions, how I am feeling. I find that when I look at the market and I see a trade in that moment setting up, I get very panicked because I feel I am missing out and I'm not ready, and it's not good to take a trade when you're not ready. So it's really good to fill this out in advance. So for example, I've been yapping for 10 minutes and I yapped for 10 minutes before that when I did the pre-recording, and the trade still hasn't set up, meaning I've given myself plenty of time to know what state the market is in, know what I'm currently looking at and what I need to look for to place a trade, rather than taking a gamble on whether the candle that's currently setting up is the candle that I need to be taking a trade on, right? So give yourself the time, because it really helps your emotional state. I'm sure there's a thing for that, like time, emotion, setup, blah, blah, blah. There'll be a word for that. I'll create that at some point. That'd be cool. But yes, I will write in the confirmations being area of liquidity, the fact that we're in a range. There is daily bias, there is 4-hour bias, hourly bias, and no, liquidity, 4-hour, 1-hour liquidity, but the general upward bias. And the other confirmations will be, or should be, that we see a clear rejection, i.e. a wick, and then we see confirmation of rejection where price either shifts up or we reject from this area, wick, retrace. But we haven't got that yet. Price is slowing down, which is a slight tick, but that's not enough, right? We need to see a clear establishment that price wants to move up. And one candle isn't going to cut that, right? We see a nice shift up here, but what does that mean? It's in the middle of a range, and then it doesn't continue after that, right? So a shift doesn't mean anything. You need to see what happens after that. And again, if we do get a shift, I need to wait for a retest. But that's what I do for that. Yep, filling the confirmations there, emotionally wise, just to fill you guys in. Right now, I feel calmly. I haven't placed a trade yet and it's not setting up, so I'm not nervous yet, but I know as it gets close to it, I will be a bit uncertain of myself. So that uncertainty means that I feel that I am out of practice. I am not fully competent. I'm not fully confident in my ability, and that comes from general competence. Confidence comes from competence. So I know that I definitely need to do more back testing and just generally be more aware of what's going on. If price moves through this area and continues moving down, I will not be looking for a trade because price is moving down rather than rejecting. So we need to see what happens. But yes, just looking at rejection from this area at the moment. So right now, feeling calm, feeling collected, not feeling confident, but not feeling anxious or nervous. So that's good. I think that's it for now. I will update you guys or release another video depending on how it goes. And the video will be about what happened in the trade, how the exit was, and then going through the trade refinement questions and what is next. But that's all from me. If you don't see a trade review, it's because it didn't set up, or I forgot. But yes, that's where we are for now. And then I'll fill on all these bits as well. And this I will set up depending on, it'll be a dot, and the color will depend on what happens. So I have this plan here. Green is I took the trade and won it. Red is I took the trade and lost it. Yellow, break even trade. Purple, didn't take the trade but won out. Black, didn't take the trade and lost. Didn't take the trade but it lost out. Blue is planned but didn't happen. So for example, plan this trade. If it doesn't happen, then it will be blue. So there we go. There's that. I will see you all in the next video.